All right. So let's make a quick recap or a quick review on last week's price action. And in this particular review, we'll be looking at how to trade consolidations, right? How would you be trading in a consolidating market, right? So without wasting any time, let's get into the market. So this was our focus for last week, and this US 100, which is basically Nasdaq, and we got that push higher, taking out that buy side liquidity pool, and then we had the daily delivery, and we can see there's a midweek reversal profile. We see Wednesday forming the law of the day of the week rather. So let's look at S&P 500. So we can see we had the same, pretty much the same analysis or the same focus going into last week. And what did we get? We got a push higher into what? Into that buy side liquidity pool, which is this old high. So we trade back into this order block, off that order block, and that was basically it. Now, as we was trading last week, right? We realized that S&P, right, was lagging behind. S&P 500 and US 30, which is the Dow Jones rather, were lagging behind, and Nasdaq was pretty much the leader, right? US 100, as you can see in the statement, US 100 already delivered to its objectives, right? So Six Sister will be in play for S&P today, and this message was pretty much put out on Friday morning. As you can see, there's the 19th of January, 7 a.m. And we was expecting what? Price to continue higher into this particular buy side liquidity pool on what? S&P 500. So this is Friday, Thursday, Wednesday, reversing from this daily BC. But that is not our point of focus for today, right? We are focusing on this particular consolidating market, which is what we had a long term consolidation on the Dow Jones. Now, if you look at the Dow Jones, right on the daily, you can see the price has been consolidating within this range high and this range low. So we have a consolidation low and a consolidation high. And we've been pretty much range bound, consolidating, not having any particular direction. Now, what do we do if we have a long term consolidation like this? So we already have what? Buyers on S&P and Nasdaq, right? So that is bound to affect the direction of what? Of US 30. Now, when are we most likely to trade US 30? After price does what? After price engages either the external range high or the external range low. But since we had a bullish bias in this index market, then we would expect what? Price to engage the external range low of the consolidation and then start trading higher. And then we want to be trading where? The expansion to the opposing end of the consolidation. I'll say that one more time. Since we had a bullish bias, the expectation would be for price to drop lower, taking out the consolidation low, which is basically what? The manipulation phase, right? We manipulate lower and then we expand higher, which is the true direction to the consolidation high, which will be acting as our draw on liquidity. Now, looking at this, you can see how we dropped below this consolidation low, and look at how we are respecting this discount array in a form of this old low. We drop below it on this particular day. What do? We close above that old low. We're respecting it. The next day, we drop below the same consolidation low, right? And the previous daily low, and then we close above those two discount arrays. And then on Thursday, right here, you can see how we drop further below this previous daily low and below that what? Below this consolidation low again, which are these two discount arrays still being respected as we close above the two key levels, right? So on Thursday, the expectation would be that if we are trading higher, then where would price be trading higher to? On Thursday, we'll be trading from this range high to the new range low that has been formed by Thursday, and price would likely gravitate all the way towards equilibrium and above, equilibrium and premium of the range. Because now there's the draw on liquidity since we've already engaged what? We've already engaged the consolidation low, we've already manipulated to the downside, taken out sell side, and this is the new draw on liquidity now. How far can it go on Thursday? Equilibrium. right? And then Friday would be what? An expectation of what? An expansion towards our draw on liquidity. What is this? There's a Thursday reversal profile. So looking at the 4 hour now, there's what we had. Took out that consolidation low, kept on digging into sell side, kept on digging into sell side, failing to displace higher, right? Up until when? Up until on Thursday, that's when we see price closing above this down close candle or this up close candles, these two up close candles that formed what? A breaker because we had a low, a high, and a lower low. So we close above that. We are confirming what? A change in the state of delivery. So we are confirming bullish order flow coming into play, right? So this is most likely to be what? The buy side of the curve now being uh, initiated, or the buy program being initiated right there as we confirm this change in the state of delivery, right? Now, let's look further into the 4 hour, right? So we had that change in the state of delivery, sell side being swept. What do we have here? Right here on Thursday, we form these two down close candles. And then we see price retracing all the way into this two down close candles, which form what? A 4 hour order block, right? So that 4 hour order block is most likely to propel or to initiate a rally for price to where? To that buy side liquidity pool and this smooth edges here. You see relative equal highs here. In case you're not looking for that highest high, then you can be using this as your original consolidation, and then this will be your smart money reversal, and then we push higher to take out what? The buy side liquidity resting right here. So we've already marked out our 4 hour order block, and what's the next objective? We'll have to drop to the 1 hour now because we're trying to trade what? Friday. And there's purely hindsight, right? We didn't trade on Friday, but the team just thought that it's much wise to actually put this out since most people don't understand the protocol for engaging a consolidating market. Now, on Friday, there's Thursday's price action, as you can see. Now, what do we have on Friday? On Friday, we have that 4 hour order block. We have the midnight opening price right here. There's the 19th, literally right here. You can mark that out on your own. And we can see what London does. London expands, right? Instead of the typical, we see London forming the law of the day and then wada, wada, wada. We didn't get that in this case. What did we get? We see an expansion, right? An expansion away from the 4 hour order block. Once we expand away from that, during New York, we came back into this range, into this order block. Why is this a high probability order block? It's because as we was expanding in London all the way to New York, price was forming a new dealing range from this low to that high, right? Let me show you. From this low to that high, that's a new dealing range. And here's a tip that I learned from the OTE trader. Uh, Whenever a new dealing range is formed, price will leave behind what? An order block. And that order block becomes a high probability order block, right? So we have these two down close candles. You mark that out in time, you can see that price was literally trading all the way into the opening price of this down close candle. And what was the magnet for this particular retracement? The main point of interest was the 4 hour order block. And what did we have also inside that 4 hour order block? We had that 1 hour fair value gap, which is a BC. So we have the 4 hour order block, the 1 hour BC, and the 1 hour high probability order block, right? High probability order block formed as price makes a new dealing range. We'll need to do what? We'll need to buy inside the discount of the new dealing range. And this retracement is happening where? It's happening at the equities open, which is basically 9:30. Let's look at the 15-minute time frame now and see if whether we had setups or a setup that we could have potentially traded off this 4 hour point of interest from. So right here we can see the 15-minute time frame is a little bit too noisy for my liking. We can see order pairing. We sweep this sell side liquidity right here as we dig into the 4 hour order block and the 1 hour BC and order block too. So it's what? Nested PD arrays. When two or more PD arrays are nested together, they form what? A high probability key area, which is most likely to be respected. So right here we only have what? We only have this order block confirmed, come back into it, but it's not so clean. and we only have this M15 PC. So we're trading where? We're trading below the 830 open. Why is this a point you should be taking into consideration? We are way above what? The midnight opening price. Price is not looking to do what? Price is not looking, it's not willing rather to trade below the midnight opening price. So what does this signify? It shows that price is heavily bullish, right? If it's very much bullish or in a hurry to deliver its buy side objective, then you are most likely to see price failing to go below the midnight opening price to accumulate more buy positions. Now, let's go into the 5 minutes because there's nothing of interest to me on the 15-minute time frame. So whenever the 15-minute time frame is noisy, I'll use the 5 minute time frame. You will understand. So on the 5 minute time frame, the expectation is I need to see the criteria for my engagement. I need to see what? I need to see two fair value gaps being formed, and I can only execute on the second fair value gap. Listen to that part again. I need to see two fair value gaps being formed. I need to see the first one being formed, and then I overlook that one. And then the next one that's formed, that's when I can execute or look for buy opportunities on that fair value gap. Why is the reason behind it? Here's the reason. So we have price doing what? Forming a fair value gap after reversing at the 4 hour BC, 4 hour order block rather, and a 1 hour BC, whichever level that you could have been annotating or looking at. So we pushed lower into this first fair value gap. What are we forming? It's a low risk buy afterward, a smart money reversal. I'm not buying the low risk buy because I'm not trusting the fact that price can easily just hold here. Price would have easily done what? Traded much lower and form another lower low and before it could rally to the upside. So I'm waiting up to see if whether the first fair value gap will hold, right? And then I need to see a change in the state of delivery. So right here we see a change in the state of delivery as we close above this three down close candles, close above the opening price of this one. So I'm buying what? The next fair value gap. What's that? The first leg of accumulation. And then the next area where I can be buying would be what? The second leg of accumulation and further and further and further. So why do I opt for changing the state of delivery other than the usual market structure shift? Look at this. Price trades lower into the fair value gap. Low risk buy. Push higher. We don't take out that swing high. We don't have a market structure shift yet. So you would be waiting for what? Price to trade all the way onto this candle to break that high before you can actually start engaging with price. Then what would that result in? You'd have missed this opportunity. And that's, you're not even sure if whether you would have had this opportunity into this order block and that overlapping with that fair value gap. So what am I doing? I'm trading a change in the state of delivery because that's more of a confirmation that's solid to me as a trader, right? Those who are using market structure shift, you can still make it work, but it's not ideal for my approach. And right there, you can see how we respect this 15 minutes fair value gap at the closes of this candlesticks here on the 5 minutes. Now let's look at the risk to reward ratio and how we would have approached taking a trade in this particular market. So right here, like I said, I'm overlooking the first fair value gap. There's just a confirmation to say we have we have done what? We have had this much the change in the state of delivery. So right here, once the buyer program is confirmed, I'm buying the next fair value gap or the next order block, whichever that I'm content with. So my entry would be where? On the fair value gap high right here. As you can see, it's right there. And where is my stop loss? My stop loss is on the low risk buy. I'm trusting this short-term law not to be violated. If it's violated, then I'm probably wrong, or my bias is probably wrong. So I'll be taking that L and moving away from that position. So right here we have our entry right there, stop loss right there, and where would our logical first TP be? Our logical first TP would be on that swing high formed during London, not London but New York, right? The swing high would be a logical area to take profits of. And where's the other TP? The other TP is that draw on liquidity, which is the consolidation high right there, which was basically hit somewhere around 2 or a few minutes after 2 p.m. New York time. But I'm content with the 1:4 risk to reward ratio. I'm not looking for home runs, right? I'm looking for the bread and butter low hanging fruit objective. So right here, entry right there, a re-entry, I'll be scaling in more positions rather inside this order block. Once we come back into the order block, I'll be putting in a smaller position, and I'll be riding it all the way to, I'll be holding it all the way to that buy side objective, and potentially leaving a small runner to attack that draw on liquidity for the day, because I'm not sure if we're gonna reach that draw on liquidity, right? You're never certain, and there's a long time for me to be monitoring a trade, because it just eats on my mental capital. So with that being said, that's basically that with how you could be trading, could have traded Friday, uh, Dow Jones consolidating environment, and that's basically that.